Take it across to Prudent Corp's management. The numbers are looking very good. Sanjay Shah, the CMD, joins in the show right now. Sanjay, hi, morning. Good to have you on ET now. Seems like an excellent quarter for you. Margin expansion of 164 bips. Your profit has jumped up 61%, 39% plus growth on your revenues as well. Where's this growth coming in from?
Thank you for having us on your show. But as you are knowing that last year has been significantly better for the entire wealth management, and specifically in the wealth management, mutual fund industry and within the retail has done significantly better. So if you look at, we started the year with 52,000 crore of AUM. We ended the year with almost 80,000 crore plus as far as our equity AUM is concerned. So there is almost 53% jump in the overall AUM. And that's something which is very, very important and which is contributing to a huge top line as well as bottom line growth.
Looking at the way how the entire SIP structure is moving, one is getting a sense that the new additions are now slowing down. Is that true for you as well?
Nikunj, I think you should not look at 1 or 2 months as a trend, but I can tell you, for example, if you look at the full year, we started the year with 517 crore of SIP book, and we ended the year with a 726 crore, and these had 726 crore we mobilized from 25 lakh SIPs. So overall, I think the situation is much, much better. Traditionally, February, March is the month of investing into ELSS, tax planning, and everything. So you'll see some slowdown in that particular 2 months. But however, I believe that today industry has 19,300, 400 crore. I'm sure we'll reach to a 25,000 crore in next 2 years time, or at least next 18 to 20 months time. That is what we are projecting. We also have taken a internal call of reaching to 1,000 crore of SIP book in next 1.5 year. So I think we are very confident that SIP is an evolving story for the retail people, and there is a strong TINA factor because there is no alternative for people to invest small amount other than the SIP from a very longer term perspective.
I also want to talk about, your portfolio from insurance products, which is currently around 13% of your total AUM. And please correct me if I'm wrong here. What's the internal target that you've set for yourself for the insurance proportion by FY25? And how is it that you're planning to increase penetration in this particular category?
So in case of insurance, if you look at last year was a bumper year, specifically after the taxation changes came in, LI was a huge contributor in last year. And if you look at my last year's business, bulk of the revenue came in month of March from more than 5 lakh rupees ticket size. In the current year, insurance has been broadly into specifically in case of LI, it was a base formation year because more than 5 lakh ticket has just disappeared. So overall, I think the LI has degrew in the current year, but my health book has grown significantly. The fresh premium has grown beyond almost about 37%, and now my health book is almost about 120 crore. So overall, this is a year of consolidation on the overall LI and GI combined. But as you said, that our growth driver would be, as you knew, that Prudent is a very strong B2B player, and we have 29,000 plus mutual fund distributors who work with us, and day in day out our effort would be to convert these mutual fund distributors to a point of sales for advising investors to provide protection also. So we believe that effort will continuously work towards increasing penetration in the insurance. Today, non-mutual fund businesses are about 20% in my kitty. We assume in next 2 years, the mutual fund, which is now about 79%, should be about 75%. So overall, mutual fund is likely to grow at a much better pace, but I think we believe insurance will do much, much better. Positive point for us would be that in case of insurance, also our focus is specifically in GI. We are purely retail driven. So I have 120 crore of recurring revenue book, and that we are expecting that will grow at a significant pace.
How much of your business is a function of bull market, which is that if I look at the broking industry, markets go down, revenue goes down. How much of your business is a function of cyclicality?
So, Nikunj, cyclicality is a part of entire wealth management industry. However, one positive part for the mutual fund distribution and the health or the GI parties that where you might see the mark to market up down, but however, trail is linked to your AUM, and because trail is linked to the AUM, you can have a very reasonable projection as far as revenue is concerned from a mutual fund segment. I'll just give you an example. If you look at in last year, my full year average AUM grew by 32%, while my top line also grew about 27-28%. It could have grown at 32%, but there was one element of B30 incentive which was withdrew by regulatory last year, which was about 6-7%. अगर मैं वो 6-7% को add कर देता हूँ, then my top line would have grown in line with my AUM growth. And that is what I'm just trying to tell you, that this business where it is not essential that you should always do the transaction for generate the revenue. As long as AUM is there with you, I think the revenue projection would be very, very stable. So compared to broking, in case of mutual fund and the insurance, there is a trail kind of a revenue, and that's the reason you might see a small, lower cyclicality when it comes to a revenue.
You are into B2B, what we know, what you've already defined. Now in B2B, the competition is also high, commission structures always, they keep on getting challenged. So what is the risk to your current commission structure if the B2B competition intensifies?
Sir, I think B2B has the competition from all the counters today. If you look at all the stockbrokers, they had been having the sub-broker model since ages. So it's not that competition is emerging today. However, the prudent is concerned, we are very, very specialized when it comes to handling the wealth management piece through mutual fund distributors. And there we are confident that because we have demonstrated our capability to handling them for last 20 years, and that has created a strong faith in us. So probably, but you are right, competition is something which is going to emerge, and once the people see some B2B player doing much better, you'll see more and more player will try to enter into the segment. So I think probably competition is a part of game. We believe that commission is not the only criteria where people work with us. I think they want many other services, technology, hand-holding, probably motivating and training them for doing the business, ground level support, offices, relationship managers. So these are a lot of factors which plays an important role in their business. So we believe not only commission, rest all things also makes huge difference. And there probably we and my biggest competitor, there are two players in this industry who are very, very strong, and we both have an edge over others.
Sanjay, great to have you on the show. Thank you so much for taking the time out and joining in. That's the word coming in from the management of Prudent Corporate Advisory.
If you like this video, then like, share and subscribe to ET Now.